Today we're going to talk about double zeros and our simple Forex trading system and to stop chasing the candles. Stay tuned, traders. We'll be right back. G'day traders, Stacey Burke from Stacey Burke Trading. Friday, a lot of movement this week, some fantastic trades. A lot of traders have messaged me about catching some of the big moves earlier in the pound Aussie, pound New Zealand. We saw some good moves on Wednesday. Today, Friday, non-farm payrolls tonight. So I think we're going to probably see a lot more volatility again heading into the weekend. A lot of emails, a lot of questions, a lot of fantastic feedback. A lot of questions have come from the Daily Levels videos. We're going to talk about that today. We're going to review some things. We're going to go over our Asia box and the importance of identifying the double zeros, the timings, and about not letting the price action distract you from what's happening at those levels. So first we talk about structure, we talk about the bigger picture, we talk about trend lines, bigger geometry patterns, head and shoulders, symmetrical triangles, descending, ascending triangles, flags, pennants, the things that we can see where price is either respecting. We've seen that with the 4-hour charts. We've seen the markets continue to make new highs, respecting the 4-hour trend lines. We've also saw smaller geometric patterns, symmetrical triangles for breakouts, for measured moves. We've saw rectangles after strong moves. We've saw the market trade and then explode for a continued measured move. So it's really important to step back and look at the bigger structure and also smaller patterns within the bigger structure that can set up intraday as well. Now we talk about the high and the low of the day. We're going to just go a bit more in depth with that today because a lot of questions have come up from the Daily Levels videos. I've received a lot of emails about that. We're going to talk about the importance of the previous day's high and low. So if you think about the market opening up in the next day's session, if we're inside of a previous day's high and low, we're most likely still respecting a double zero box or a series of double zero boxes that the market is trading inside of. And so that previous day's high and low are areas where there are obviously stop losses, there are areas where there are pending orders, and there are obviously orders there for take profit as well. So it's important that we remember that concept that there's money sitting up there, and if the market breaks through or below into one of those levels, it has also potentially now broken out of one of the boxes. Now, we talk about not letting the price action confuse us. When we've done the Daily Levels videos, I think some people are still struggling with a couple of simple things, although I think it's helped. I'm going to go through that a little bit simpler today in today's Daily Levels videos, but regardless of what price action they paint for us in Asia, they're creating a buildup of contracts. So they'll have buy signals, they'll have sell signals that may spread out over a few different boxes, but what will happen is that when the Europe-London changeover happens, at some point they will burst outside of that range, typically in 3 strong moves. Now, that will normally occur in that 12 candle window that we talk about. So when the market kicks in, we can already be at numbers, or the market, when it kicks in at the market opens in that 12 candle window, will either break out of a range to test a level, or it may be inside of a range below a box for a move up, or it may be breaks through a double zero box and goes sideways for a move down, selling off of the zeros. I primarily focus the majority of my trading looking to target the double zeros. Now right now we've had a lot more volatility. Typically, a lot of people have asked, can I trade this on gold? Can I trade this on oil? Can I trade this on the other US pairs? Any pair, any instrument that has numbers, you can trade this off of. But in my experience, the pound crosses primarily will out of the 6 pairs, you're going to get a really textbook simple setup off of one of these pairs at the timings in that 12 candle window at the double zeros. Now they may be whipsawing this back and forth, but they may be creating a buy signal at the end of that 12 candle window, or maybe even at 14 candles of a buy signal. Now they may paint, like yesterday we saw on the pound yen, we saw a flag and a consolidation sideways on top of the double zero box, and at the end of that 12 candle window they gave us an engulfment for a measured move for 50 pips up. So if you step back and start looking at the high and the low of the day and where it's at, and when they burst out in that market open in that 12 candle window, at some point they will go into a consolidation. Now a trend day typically will break a previous day's lower high, pull back, and it may pull back into 50 for a sell above double zeros, or it may break down into the double zero box below and work up into the low of the day for a sell down. And vice versa for the buy. They could be underneath for a buy, or they might break into this box and work the low for a continuation, as we saw in the pound Canadian on Wednesday. So it's important to step back, look at the high and the low, let the market, when it opens in that 12 candle window, tell us where it's going to position itself for a buy or a sell signal. So again, focus on the numbers, primarily the double zeros. Right now we're looking at 100, 200 pip movements. You may get filled. The problem with the price action is it will get you chasing stuff in both directions, but you have to step back and look at, did they come down and are they going sideways for a buy signal, or have they gone up and they've broken through and they're layering on top for a buy signal, or are they trading off the bottom into the top back and forth? Now that brings us to our next important issue in that 12 candle window, is that once you have that price, it's important that in that 12 candle window they will confirm, are we buying or are we selling? At some point they will give a price pattern that confirms our thesis. Then the next thing you need to do is to fight for the best price. I read a really interesting interview with Bill Lipschutz, who by all accounts is probably one of the best currency traders that's ever traded. And he talked about, once his thesis was confirmed, not paying the spread. And so if your spread is 2 pips, 4 pips, in some cases it's been 15 pips, if you were going long, letting the market, when it auctions back, to possibly fill a gap or to put pressure on traders who have got it right, you might get filled at 15 away from the numbers and they stop punt back to zeros. Fight for the best price in terms of the spread, or even closer to numbers. That's your discretionary choice to do that. We're using 15-minute charts. The other side of the coin is that on a fast move, they may not let you get a chance for a pullback to get a better fill. But that's, again, the interpretation of the type of market that you're trading. 90% of the time, they will leave no gaps, and you'll get an opportunity to get a better price fill. We put our stop loss in place. If we're going long, our stop loss goes underneath of our entry bar, or at the low. If we're convinced that we're entering in at the low of the market, we put our stop in at the low. We adjust our position sizing accordingly for risk, and then taking profits. So we talked about measured moves. We've talked about numbers. We've talked about not so much about timings yet, but we're just going to expand on that. If you're in a strong move and the market goes 50, 75, 100 or more pips, and we're getting timings wise into the next 3-hour window, or towards that gap time between that 3-hour window of London, the London Open and the New York Open, we potentially may see a stop hunt come back. Now that market may not be at numbers yet. It may have hit the previous day's high and gone sideways. It may have gone to 50 or double zeros and gone sideways. Or it may be in between 50 and 0 and going sideways, at which point, again, depending on how you've measured your target, if it's been based on numbers or a high and a low of a range, that timing is an issue, because the further out that timing goes, and if that market is in consolidation, the more likely that the market may come back to stop hunt you. Again, that depends on the type of day that it is. If it's a trend day and it's been a straightaway trade like we saw on Monday on the pound New Zealand and the pound Oz, those markets typically will not come back, and they will close the session for the 24-hour market near the extreme of the day. So just something to consider. Having a profit target, making sure you're taking money off the table based on either a measured move of the range that you've broken out of, or numbers. So again, if you're in at 00, you might be getting out at 50 or 0 or 50, 150, or timing. So if you've been in that trade for 2 hours, 3 hours, how far has that trade moved? Has it moved 100, 200, 300 levels of rise, 3 levels of rise, or is it moving in 50 pip boxes for a 150 pip move? Again, these are all things that you will have to keep learning from each trade, getting better, trying to squeeze the most out of a winning trade that you can do. We obviously want to cut our losses and ride our winners. Trade management. So again, this is part of that trade management window. I have a really good friend of mine. He's notorious for going to break even right away. And of course, inevitably, 90% of the time he gets stopped out at break even, and then he painfully will watch a trade march away without him. I'm comfortable to leave my stop there and get stopped out. If I have taken that position, I will get stopped out or let the market move into the next box before I move my trade to break even. Now the other side of the coin for him, I'm notorious for not taking as much profit as I should. I will often hold on to a position longer and longer, trying to get more out of it and lose some of that profit in return. So I've had to work on getting better at taking profits. Self-management kind of coincides with the trade management, because hope, fear, and greed and pain will all creep in to interfering with you being able to make a clean, simple, concise decision about your trading. This is why your plan has to be very, very simple, duplicatable, and scalable. So the self-management part, again, little issues that each one of us will have, making sure that you're not taking other trades that are wasting your time or your energy or causing you to lose focus on high quality trade setups. This stop hunt hour, making sure that in terms of timings that you're not trying to call the high or call the low. Remember, if you're trying to do this prior to the market open and you're inside of the high and the low, chances are when that next session opens in New York, they're going to either stop hunt back into a move if you haven't taken profit, or stop hunt through the high for traders who have gotten in short thinking they've called the high of the day. Meanwhile, they've just come down to the lower box, and New York then continues for a measured move. So it's really important to pay attention to the numbers, the timings, and that 3-hour window, and the session opens. Keep it really simple. If you can keep going through this, you realize you want to step further and further back and be working off the high and the low. That's where the institutions work, that's where the banks work, everything in between. So if they pull back after a big move in London, if they pull back and consolidate, chances are they're building up order flow with stops above and below. They might hit it again before they take off and continue that measured move. And the same goes if they extend that out, that extra 3 hours heading into New York, and they extend that up even higher, chances are, as we've seen this week, they're coming back for 200, 300, a 400 pip move, as we saw on the pound Aussie this week. So keep it simple, traders. Again, a lot of questions. We're going to break that down into some smaller videos, how the measured move calculations work for profit targets. But again, focus on double zeros. Go back, print some screenshots off, review your trades for the week. Remember the previous day's high and low. If we're the next day, if we're inside of that, we are still trading in the previous day's range. So those double zero boxes can give us a lot of information when we get to that end part of Asia in that 1 o'clock, 2 a.m. New York Eastern Standard Time window, where we're at in terms of either maybe breaking down low to come up or breaking down low for a measured move continuation again, or if we're up high, maybe coming down to 50 underneath for a buy signal on the way back up. So hopefully that clarifies things a bit more. Again, keep the questions coming. We'll break that down into some question videos specifically to each one of these that a lot of questions have kept coming. I appreciate the feedback. Again, just everybody's starting to really see this in live time. I think from the feedback that I'm getting, people are really starting to recognize the game that's being played. And then the next step with all of that is the live performance, because of all the things that they do with the speed of the candles, the holding of price, the widening of the spreads, the flash and the momentum, the bursts of the price, all the things that are designed to get you to chase it, to get a poor fill, to get an entry in the wrong direction and take your money. So this is a winnable game, but it's like any sporting activity, like Mike Bellafiore says, it requires you to constantly be working on getting better. So the question then is how good can you get? Stay disciplined, traders, stay focused, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.